Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Marty. How are we doing in YouTube? And welcome to YouTube if you're visiting the Trader Lab today. Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? Sorry, guys. All right, thank you. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. Streaming live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. It is based on structured trades that I share with everyone at no cost in the Bookmap Discord Trader Lab community. Also, there's a library of webinars if you're interested in understanding this process. This is about the business of trading. It's about developing potentially a career path to have a sustainable business in the trading business. Now, the thing about this is what most of us imagine trading is and what it is might be somewhat different. Essentially, trading is a gaming business, so it's overlaid, and what we do is we use casinos in the sense of their business model to extract statistical probabilities, and then using that model, apply that to trading. So if you want to consider the connection, games that are played in the casinos are the same as our structured trades or setups. So if you can understand that business model, then if you apply that to the trading business, you might have potentially a more sustainable opportunity to extract dollars from the other participants in the market versus them extracting them from you. And of course, past performance is not indicative of future results, and you have to actually make a commitment that you want to learn a business and you want to be, and in this Trader Lab is really almost like getting an advanced degree in trading. So there's no quick solution. I know we all would like that, of course, human nature being what it is, but you really have to roll your sleeves up and say, do I want to be a professional? If you do, then you might want to visit the Trader Lab. And again, thanks for visiting us today. And if you're in YouTube, there is a link in the bottom of YouTube if you're interested in visiting the Trader Lab community and participating. And of course, I'd like to meet all of you there. And there is no cost for the Trader Lab, which I think is pretty good. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and a piece of paper. Today, we're going to do a little deep dive into some concepts that you're not going to want to miss, but you need to get that pen and paper out right now. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get there, we talk. Also, I'm going to be discussing statistics and the overall condition of the market and how you might put probabilities together with context, in other words, condition of the market, and how you overlay some pieces together. Now, I can't go over everything, of course, in a very limited time, but I'm going to do my best. So, on that pen and piece of paper, let's get going. First of all, we have to, and by the way, the structured trades look like this. There's 60 PDFs of these, just so you know. I'm not going to spend time, but they're available at no cost. You can access those through the Trader Lab, and you can use the link in the bottom of YouTube if you are interested in what you see. The trades I share in the stream, and there's a lot more to this, a lot more trades, a lot more opportunity. This, by the way, is the Trader Lab. Now, I'm going to explain what you see here, but this is yesterday's RTH. Now, yesterday, and this is a distribution. I don't remember actually. I think, so this is yesterday's trade. This red line here is called the microcomposite low volume node. It was at 60.14. And then we had yesterday, and this was the low of the day. So the reason this is important, and this, by the way, yesterday's high is a new all-time high. Now let's look at these levels so we understand what I'm showing you here. 60.35.50 is the highest volume in yesterday's RTH. And again, I always like to start this, so if you've heard this before, just be patient. Trading is shopping. It's not predicting, it's shopping. So if the highest volume or retail price, like when you buy something in the store, buyers and sellers agree on a price. If you think it's a fair price, you'll pay it. That's called retail. If the price goes on sale and we don't spend time down here because this was too low, if we find too high, we can also find too low. And if we find too low, we can return. So what this sets up, now there's another piece. I'm going to discuss something called fractals, not time frames, fractals. What's a fractal? A fractal's like a Russian doll. They're inside each other. So when you think time frames, you're thinking higher time frames, different time frames. Well, the only time that's relevant, at least the way I look at the auction, is this is the RTH and it has a fixed open and close. That is a time frame. Other than this, there is no time. It is all rotations. I call those fractals, and you might too. So 60.35.50 is yesterday's retail price. Yesterday's low a day was 60.14. And this right here, now I'm talking fractals. Let's look. What is this in this distribution? Outside edge. Oh, it's on sale. 25 is the highest volume for these 3 days. And it was yesterday also. So this is like your retail price in a higher time frame. In the shorter time frame, next one down, daily time frame, this is the high volume. So let's think about this in multiple dimensions. Retail in the big enchilada, and then just yesterday, retail. Is everybody tracking? Give me a yes, give me a no, give me, what are you talking about? That's okay. How you doing in YouTube? Hope you're getting something out of this. Now, this is yesterday, and there was our support. Now we're going to go into what's going on right now. And then I'm going to give you statistics. What was our high a day? 60.35.50. This is the language of the market. What does it say? It says too high. So if the market opens and is lower, and I test up here, and it's too expensive, I'm not paying that. What does the market tend to do? Come back to the big retail price, 25, and if I get below there, come down here potentially and test what was too low. And what's under here? Stops. If I can clear this low, it's called the microcomposite low volume node, and it's at 14. And I just did this before I started streaming. Then we have the potential to come here and potentially down here. Not recommendations. So let's now go a little further. Hope you're getting something out of this, and I'm doing this to lay the groundwork. Now, 8:04 a.m. Central Time, before the RTH open. Patience today. Follow your plan. We are in balance. Balance means two-sided trade. Anticipate two-sided trade. Let structure develop. It's up to you, of course. Manage your FOMO you have all day. So now, and then we have the Trader Lab, the comments, as we post and things happen. You see the charts and all, and there's a lot of other things in here. Trades. And here's actually one of our participants' trade stations. That's kind of nice. So we have all level of traders in here, from newer developing traders on to more seasoned traders. I've been trading going on 45 years. Our senior trader, over 50, that he admits to. Okay. Now, statistics. Grab your pen and paper. Why am I taking all my time? You guys want to see trades, right? Well, this is what the business of trading is. If you're a strategist, you have a plan. If you are in a chess match, you have a plan, right? A narrative. If this, then that. If not, then what? So conditional narrative. So part of the trade plan, and I'm showing you the plan basically in a very abridged version, is statistics. Remember? Casinos. So RTH open is going to be here. So we're opening, and this is yesterday's settlement. So we're opening lower inside of yesterday's range. Yesterday's low is below us. Yesterday's high is above us. So we're inside a range. So let's grab some quick statistics. There is, let me find it. So many statistics, so little time. Sorry, guys. 25 was that micro composite volume point of control, the retail price in the intermediate time frame. The overnight volume point of control, remember this is all fractal, is the highest volume from the last auction, which is the ETH. Write this down. It has an 83% probability of getting tagged during today's RTH. 83. Now, there's more. Hold on. Got to uncover these for you so you can see them. And the reason I'm bringing this up and discussing this, because everything we do is based on probabilities. Remember, casinos operate on probabilities. They can't predict, but they operate on probabilities over a random distribution of outcomes. That is the trading business. You don't have to accept my word for it, of course. 83% probability we get there. There's more. I'm not going to give you all of these. I'm just going to give you enough to kind of, as they say, wet your whistle. Naked volume point of control. That was the 35, which I just showed you. I'm going to flip back to that just to show you where all these things are coming from. And that one has a 70% probability. 70% probability of getting there. We're going to open here, and we're near this high level, and we have statistics below us. There was some more. ETH low, yesterday's low. By the way, the probabilities of hitting either yesterday's high or low. Now, I did post in Trader Lab that we might have an inside day today or take out the low of the day. So, you know, and me, no clue. So, and when I say no clue, I don't want to say I'm ignorant. I'm saying is it could do either, and you got to be prepared. There's an 85% probability we take out either yesterday's high or low. So the key was if we can take this out, then it really opens the door below. So that's before the open. Is everybody tracking so far? Well, Zoltan, it's not going to be an inside day. Looked like it might be. Are you guys tracking? How are we doing in YouTube? Please give a thumb up, hit like. All right, let's see what's going on now. Now we're going to get into the RTH open in the first trades. Now remember, we are anticipating, or I was, and everybody does their own thing in Trader Lab. This has a 70% probability, and there's roughly an 80%-ish probability, past performance not indicative of future results, of taking out yesterday's high or low, and about an 82%, and I'm just ballparking it, probability of getting here and taking out the first hour's high or low, which is called the IB, over a 90% probability. You can get all these statistics in the Trader Lab, but I'm letting you know before the market opens, we have trade plan. Then you got to adjust. It's called open field running. And there's a process to do that. So this is called the developing volume point of control. It's the retail price as it develops in real time. Okay? So I showed you the fixed retail price, which was this that's left over from yesterday. If it's too high, they're going to go, nah, I'm not paying that. And they leave the store. That's how I think of this shopping. Well, if we start here and go up, I can just go up here, tag it, go through it, test it, whatever, or come down here first and then go up. So I have my scenarios and I know down first up or up first down. And why? Let's talk about why. Now, if this is too much minutia and detail, you know, I can skip all this. But my goal in the stream is to let you understand that this is an advanced process because it's different. So this is like another dimension of understanding of market mechanics. It's called auction market theory. But what it is the true reason we have a market. What's too high, what's too low, and what's just right. And part of shopping, like when you shop, is if a retail price is too high, somebody will pay it, but most shoppers are going to leave the store. So this is what this is about right here, VPOC migration. I made these terms up when I started doing this. Nobody was doing it this way. I'm sure now a lot of people are doing it, but that doesn't matter. I don't know what others do. I just know what I do. And Trader Lab is a community where traders can come kind of get an idea of how market mechanics work and then extrapolate it into their time frame. So it's not replicating what I do. I teach language. This is the language of the market. I don't use any indicators. So I do use insights, for example, order flow, but I don't use your typical red light, green light indicator. I'm the indicator because I'm reading the auction. So let's take a look. I got to turn something off here so I don't confuse you. One moment. Okay. So this is your overnight volume point of control. This is the retail price from the ETH. That's the last auction. The RTH open is here and the settlement is here. Okay. By naked volume point of control, which is the last retail price, is here. Is this price too high or is this price too low? Last retail price, yesterday's RTH, and here we go. Where do we open? In the middle. What does that suggest? Two-sided trade. Remember, top of the stream, context. Context. So right here, market opens, I see a seller, and I see my buyers. This is called developing volume point of control. And what it is, this is your shopping experience. Too high, too low. I'm going to label this. I call them variable high volume node. Made it up. You got to make things up when they don't exist, right? So, and what I'm doing is I'm tracking the shopping. So when this here, if I come above here, after this shifts, it's saying it's too low. What's going on here? Some sell stops came out, stop an iceberg detector, and the passive side is here. Now, I don't know that. This is order flow. And the limit order book is the passive side. That's almost like if you come to me, fine, I'll buy it. Otherwise, I'm not paying. Well, if the passive side consumes these sellers, then we can get a rotation. Now, there's two possibilities. I cross above this retail price. I got to turn an alarm off here. Hitting our next target, 60.07. Not a recommendation. Let me turn it off. Okay. So when I cross over, there's two possibilities. VWAP in mid, I test this, I break low. If I break high, it puts this on the list as too high. Variable high volume node. So this is resistance right here. So break, too low, resistance, because this was too high and where the selling came in, you see? But what happens if I cross above it? If I cross above it, it might mean too low. So I'm going to mark this one. Now I'm anticipating two-sided trade. So as you saw at the top of the stream, I posted, be patient, you got all day. And because I have two things going on here, over 80% probability to get here and a 70%-ish probability to get there. And I'm in the middle. So it can slosh both sides. It's an open auction. So let's watch what it does. VPOC migration. We going higher? What happens? I see my sellers here. That's absorption. I come under this, and now this is potential resistance. Watch. VPOC migration. So I'm looking at this. I see my sellers, iceberg. I come back and test this. if I'm going to break lower, I got to come under this. What do? I hold this, I make a new high. Nothing. And I'm going, well, and we have the ETH high, which also has a probability, but I'm not going to give you any more statistics. They're all available for all of you in the Trader Lab. VPOC migration, retail price, micro structure right here. Let's just continue this. So too low, crossover, break above, shift, too low, test the VWAP in mid, too low, up, break low, VPOC migration. What does this say? Potentially short. Watch. I took this one. Very ecstatic about it. So, took this, got under here, which is fine. This was my scale. Risk neutral. Where am I going? For the probabilities, down here and down here. Okay? 80+% probability on both of these, and then go from there. So let's look. Hit the mid. Lovely. Under here. This right here, in here, is resistance. Oh, look at that. We got our 60.07, and now we're reverting. So I got taken out of this trade. Actually, I had my stuff, and I kind of left a little on the table, but that's just trading, So I'm out, and we make a new high. So I'm thinking, well, that was pretty good to get out where you did. And I didn't get out until all the way back here because the stops are above the mid in the VWAP. So I cannot put my stop here because this is easy to get taken out. So for me, my stop was up here. So I gave, a fair amount of MFE back, and that was fine. It's just, okay, fine, next. So now what? No long for me because I'm anticipating two-sided trade. So what did we have here? Opening swing low, opening swing high, take out the opening swing low, get into the stops. That was my plan. Then continue down to here. And what do? Stops here, stops there. So open, up, fuel is here, take those guys out. We come back around, take those guys out. That's just the nature of the animal. Then where's my next target? Up here. So I'm not long. I am only playing shorts. And when this happens, by the way, I'm thinking, oh, you should have got long. You guys ever have that thought? We all have that thought. But it's just, okay, I didn't have a long. I was playing a short. Now what? Do I have a long? No, I don't. Because I have to see this. Because we open below it, and maybe it's too high. Watch. Target here. So if I was long, this is my target. But since no long, nothing except potential short. Because if it's too high, it sets up a short. And I'm going to show you that because this is the next trade I took. Life in the fast lane. So right here, I'm going to take you into Fractal. Now let's look at this. I'm going to open it up. These are structured trades. These are available to everybody in the Trader Lab. There's no cost. But guess what? You want to learn how to trade like this? You got to roll your sleeves up, and you're going to school. You're going to an advanced program. Trader Lab. It doesn't matter how long you've been trading. What matters is you're willing to make a commitment to learn to speak the language of the market, not to using Google Translate, which is conflicted and inconsistent because of multiple time frames and lag. In the Trader Lab, you actually learn to see this and understand what it is. So right here, I've got sellers. There's absorption, icebergs. I have no buyers up here. I see my seller here. Okay? So my volume is over here. This shifts up. This suggests higher. So when this shifts, I've got nothing to do here. I'm going, oh, darn, right? And I think this is my next target. This is my next target. So I'm going, I don't have a trade. I break low again. So what do I have going on in here? I have volume. So this is a suspect. Let's watch it for the trigger. Break low. Here's my volume. This is a fractal of that. So this is a higher time frame. Remember, retail price from yesterday. In this quote time frame, and I don't think of time, this chop is a consolidation. What is a consolidation? It's passive buyers are here, passive sellers are there. Chop is the volume in here. So when I'm breaking below this volume, it looks like a short. And I could take a short here, and I'd have my stop out above here. And I would not be stopped out because it has to be above here. So if I got short here, my stop has to be above here. If I get short here, my stop is still going to be above there, above the high of the day. If I get short here, my stop's going to be, these are all shorts in TraderLab. And the key piece to this is this and this. So right here, there's a bit of conflict. Let me tell you why. We can either push off and go to the next target, or in the microstructure, this is too high. And if I get below this, then it's a confluence of multiple time frames or fractals. And then we're going south of the border. Let's watch. Break low, test. So we have short here, short here, short here, short there. All these are TraderLab structured trades. Watch. VPOC migration, short here. Don't forget short there, short there, short there. Break, short here. Stop has to be above this. If you're getting short here, your stop's got to be up there. So, and where are we going? Remember? What was that? Over an 80% probability? Are you guys tracking? Now, I can't see your questions. If you have them, please post them. Now, watch. So we get this. This is the next target. Now, what else do we know? Yesterday's low, and this was yesterday's low. And what was that statistic you wrote down? I know you wrote it down. And it was an 85% probability of taking out yesterday's higher low. But, and the but is, if we didn't get under here, yesterday's low, then we could have an inside day. So that was the two scenarios, inside day, or if you get out here, put your helmet on, because that sets up 60.07. Oh, I don't have this on here. It's on the other chart. 60.07. I think it's 07. I gotta look at my other chart. Yes, as a next target. And that I'll show you where that came from if you're interested. There's more, by the way. We have more structured trades here that I will show you. Continuation trades. So the short goes to here. Now, and you're scaling or you're done with your trade. It's all subject to the number of contracts. So now, what is this? This is the mid. Now let's look. What else is it? A variable high volume node. Where'd that come from? There, there. So this is support in the auction as I define it. And off we went, right? That was a change in behavior. If we come down to it, think support resistance. I'm using these structures, volume-based structures, shopping. I'm not paying that. Are you sure? Yeah, I'm out of here. Let's get in the car. What about, you sure about this price? I really like it. Convenient, it's down the street. No, I'm leaving. Okay. Now, oh, we need some buyers. How do we get buyers? Well, let's lower the price. Maybe we'll get some buyers over here. Trying to sell your S&P, huh? Well, too high? Too high? too high. I'm not paying that. I'm not paying that. Break, test, too high. Where's my support? There, watch, break, alignment, mid, and variable high volume node. Coincidence? Not for me. What else does this say? I'm taking you in a little deeper now. This is a distribution, a distribution of volume. And all it is a consolidation. So when you guys see the chop chop, I see it maybe a little differently. I see it like this is too high because we've run out of buyers. And I get down here, I've run out of sellers, and I rotate. And this rotation has high volume, like in the middle or somewhere pretty close. And that's where the chop chop is. If I leave it, that is saying that's too high. And it creates something at an outside edge called a low volume node. And you could see it there. Now, what does this mean? This whole thing is being rejected. Now I come back over here to where what was once too low, and it becomes maybe too high. Where's my outside edge, my resistance? It's right there at the outside edge of the distribution, called a low volume node. Just giving you some terminology. So now if I break below that and I rotate back up, right up in here is this outside edge. I come up here, and here's another distribution. Where's my high volume? It's right there in alignment. Let me just draw a little line for you here. And again, this is like speed reading, so I can't teach you this here. I can share it with you. And if you want to learn this, you need to come to Trader Lab, roll up your sleeves, and become part of a terrific, serious community of like-minded traders. We've come together, all different experiences, all different methodologies, to leverage our collective experience and build something better. Because it takes a community to really do the work to get it all together. So this is resistance. The chop chop is a fractal or a microstructure. We break away from it. This is your resistance. Mid in alignment with high volume. So for me, the fact the mid is sitting there is not the most important element. For me, the most important element is a distribution, a variable high volume node, knowing I fell out of this, and this is the outside edge. And if I don't get up into here, south of the border, right? Watch. There's more. So this is too high. I'm going to take it now down into more microstructure, and I can't spend time with this, but I want you to see what I see and what you can learn to see. This is a micro high volume. I'm going down now. Remember, everything I do is generic. Think Russian dolls. They're inside each other. So the chop chop here, what happened here? Well, first of all, there's the chop chop. Notice passive sellers are here. Icebergs are here. The buyers are here. You see the delta. That's sellers. That's aggressors. Now, if I push through, then they were absorbed. If I break this way, then the sellers overpowered and the aggressors overpowered these buyers here. Break low. Too high. Resistance. Come back. Chop, chop. Passive sellers are here. The buyers are here. Sellers take over here. Come back and test the micro volume right there. Test. Test. Too high. Too high. Too high. Too high. Too high. Break. Watch. Too high. See it? Too high. VPOC migration. So resistance, 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 break, VPOC migration. Now what's the possibilities? Cross above, continue down. Me, south of the border. Where are we trying to go? Yesterday's low. Next target. Here. Now it's a target, not the end of the plan. Because if we get under here, all the longs who are in here, and there's another structured trade here I got to mention to you. we're going for this next target. Now, I have to give you this next trade. And then I'm going to look at your questions. Thanks for your patience. Please post them now if you have them, because it takes a few seconds for them to get posted. VPOC migration, a potential short. What else do we see? The overnight volume point of control. Remember, this is the retail price from the ETH. It was a target coming down. If I get VPOC migration, let me show you just a little bit more minutia. This is too high. Next time frame up, developing daily time frame, too high. All this says going south. Now, acceleration, and where's my next structured trade? It's right here. It's called the IB continuation trade. It's in those 60 PDFs I showed you at the top of the stream. This is a structured trade. Let me show you. Now, this is too high. Microstructure is right there. If I'm going down in Fractal, it's in alignment with the overnight volume point of control, retail price from the ETH. If it's now too high, I break away from it. And that puts this, of course, as our next target, yesterday's low. So now, next structured trade. It's called the IB continuation trade. It's only qualified in a, where did it go, the IB? I think I lost it. In a directional market. Hold on, guys, I lost the IB. Losing it. 21 quarter, I think. Oh, yeah, it's covered up by this. So the IB low is here. So break, come back. So now we're going to look at another structure. So right here is micro high volume. And again, look at this. High volume, break, test, too high, high volume. Now, when I say high, I'm talking with a tweezer. Too high, break, test, trade management processes. You have to vet everything for yourself. Microstructure, break, too high, lower, going lower, except what does it do? Watch. Break, too low. You don't know, by the way. Here, break. Is that too high? Well, I got too high over here. Where do I come? I come here. What's an alignment? Let me come back here. Now, these are structures, and you can, once you understand, you are in multiple time frames. Now, the IB, this location we're going to short, is actually sitting under the VWAP. So you can't see it. I'm just going to throw this in here so you know where the level is for a structured trade. Look where it is. It's here. Now, levels are not walls. They're suggestions. They're areas, and I have this in a break. So going down, going to zero, right? I break above here. This puts this suggests a counter rotation. Here's the last location where it's too high. And then, of course, up here. My location for the short is here. Now, right here, absorption. You see the delta. He doesn't go anywhere. What does that tell us? There's a passive side absorbing the aggressor. Seller. Now, this is my location. I need to get short. Watch. Location. Absorption. Too high. Too high. Too high. Short. Watch. Trader Lab. This is a structured trade. If you're in Trader Lab, you'd be waiting for it. Where are we going next? Here. And if we get through here, 07. So if you're sitting here, 07. I don't know how we got there. Did we get there? Yeah, we did actually. Look where we come. VPOC migration. Are we going to swing up or down? Continuation trade or trade management opportunity. And this is your target. Now, where'd the target come from? Just to keep me honest. There. It's not, the price isn't on there, but that is 60.07 right there. Let me see if it's on the other one. Don't know. Yeah, 60.07. So everybody see this? 60.07 is, so this was yesterday's low, which was our target, and then we came back. This is the level that we took the shorts from near the high of the day at 35. Then we came around, and then this was yesterday's low, which was a reversal. Once we take it out, high probability, then 07. And it's not a recommendation, it's just the next target. This is called trading in fractals. It's auction market theory. This is what the Trader Lab is all about. And if you think this might differentiate your results from others, and there's a level, 07. By the way, if we get through here, it sets up going to 94, 95, neither here nor there. Are you guys with me? So for me, for example, this could be another short. It is not for me because I hit my primary target. So I just sort of, put the car in the garage. There we go. Now we're in real time. Okay, I'm going to come look at your questions. Thanks for your patience. One moment. I got to make some adjustments here on some stuff. Charts. And there's more, obviously, but I think you got an idea. This is Trader Lab. This is trading in the Trader Lab, and you're all welcome to visit Trader Lab. There's no cost. I think that's pretty good, considering what others charge, right? Questions, guys? How we doing in YouTube? Please give a thumb up, a like if you're getting something from the Trader Lab stream. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You can access the community. There's no cost. You do have to confirm your Discord email so we make sure you're not a spammer or some nefarious individual. Now we are watching. This is our next target, not a recommendation. It's around 95. Market never has to get there. We also have a strike price at 6 here. And then you got 95 strikes, so that's possible. Okay. And by the way, besides the community, which is, I think, as they say, top shelf, serious. It's not romper room. It is a serious community, and this is an advanced approach to trading. And if you follow the stream, and you should every day, if you're not in the Trader Lab, you'll see something. What you're going to see is a consistent application of a process in a random environment. Most of us psychologically need certainty, and we want to predict, Well, that's great, except we can't predict anything. Otherwise, the casinos would have figured out how to predict, right? So if we cannot predict, then we have to accept we're in a gaming environment like the casinos, and then it's probabilities and alignment. And then even then, no matter what you do, you're still going to pay the gamblers. Cost of production overhead. Every business has it. So most traders are risk averse, which is natural. We're wired for it. So we focus on certainty. Isn't that what you've been doing? Certainty, predictability. Well, if you change your thinking to the way a casino operates, you'll know there's no certainty. You'll know, though, that if you're going to play a game or a structured trade, you only play the games or trades that have a statistical edge that favors you. And now you're the house, just like in the casinos. You accept that you're going to pay the gamblers, and you're even going to throw cocktails and a ticket to the buffet and maybe even a Dell at them, and you're still going to extract the dollars from those gamblers in spite of your expenses and even paying them because you have a statistical edge that they don't have. You accept the random distribution of outcomes because you can't control how the gamblers play the cards or the cards coming out of the deck, but that's the business you're in if you want to be a trader. And it really means rewiring your beliefs and adjusting where your effort goes, not from getting being more correct, if you will, but only interacting with the other participants with a structured game or trade that has a statistical probability. The key to it is anchored inputs. Most of us, when we're developing as traders, are using the smorgasbord of indicators to create certainty. That is not how it works, in my opinion and experience. What works is if you do the job and actually develop an edge and the discipline to actually execute that edge, like the casinos do, they're not emotionally attached to the outcome of the next hand. They know that there's overhead and cost of production to generate a net in all businesses. We have to get realistic here. We have expenses and cost of production. At minimum, it's the losses we take, just like the casinos do. But do they experience it like a loss and a personal failure? They do not. They experience it as overhead and cost of production. Can you do that? If you can do it, then you might have an opportunity to be in the business. If you can't do it, then your outcome will probably be similar to most other retail traders who never understand the business or make the adjustments to be in the business. If that's you, use the link in the bottom of YouTube, visit TraderLab. You don't have to go it alone. It's up to you. Question. Well, Zoltan, are you in the Bookmap Discord TraderLab or just the Bookmap community? Because there's ongoing education on order flow, specifically on how to use a high tier tool like Bookmap. I don't use indicators, so what am I doing? I'm the indicator. And how do I do this? There's no magic here. I mean, this is simple. I know everyone thinks trading is complicated. It's not, to me, that's not the case. Let's replace complicated with random. And it's not just semantics. We tend to introduce complexity for the need to get certainty. So we make it complex, and then we try to curve fit to create the certainty. So what happened yesterday or 10 minutes ago somehow is going to reflect what's going to happen right now. And if you look at a big move or something, whatever it's been, and then you curve fit and tweak and tune, and you're spending your life doing that, you're going to spend your future doing that, assuming you're still in the business. That's not how this business works. And we all think it does work that way at some point, because what do we know? We don't know. So it doesn't work that way. Again, that's just my opinion, but it's based on 45 years of experience. So maybe that's valid, maybe it's not, for you. But many traders in TraderLab have been doing the same thing you've done, and they are kind of getting weaned off that letting some translator tell them what to do. And instead, they're learning to understand the truth of the market, which is the auction. Remember, the whole purpose of the market is to figure out what's too high, what's too low, and what's fair. And it does that in all fractals and time frames. So even right here, there's an auction. And if we break away from it, it is too high. Right here. And let's look at it. Right there. So I can trade any time frame. But for me, the time frame, as you call it, and I don't think a time, remember, I have to say that because there's no time frame other than RTH, open close, or ETH, open close. Then there's no time. There's only behavior. If this is too high and you see the icebergs and I see my delta, the buyers, why isn't the market going up when you see buyers? Because there's sellers on the other side. Think Pac-Man. The buyers, are they consuming the sellers so there's more demand? Or are the sellers feeding the buyers and then they fail? The high volume, see the beauty of Bookmap? I can open this up and see the minutia. In this consolidation, and I'm just taking you just a little, this is just like a little tourist event. This is the bottom of this distribution right here. The buyers are here. The sellers are here. I break. That's a trigger in the TraderLab. And where do we come back? Here. Outside edge. So too high, too low, too high, too low. Consolidation. Breakout. Selling. Trigger. Where's resistance? It's there. If I take a short here or there, my stop's going to go there. Initially, if I sold this, my stop would be up here or even here. And then once it gets rolling, I can look at this microstructure. My stop needs to stay here. I can look at this microstructure. Says it's going down. Why? Buyers here. Didn't get over the passive side. Volume is here. Sellers are below. microstructure. High volume is right here. I'm down in microstructure. Now here's the other thing about this. As I go down in this, it becomes weaker. The other part of it is, if I'm a short-term trader and I believe I've got my next target open below, I might be trading to that. And I'd be monitoring and managing my shorts, or adding, subject to my skill level, my ability to have a timely entry and know there are no indicators. There's my indicator. There's my indicator. Too high, seller, come back, short. Too high, seller, come back, short. Too high, break, come back, short. Are you guys tracking? Trader Lab. Now, to make sure you understand, these are not shorts unless it's vetted and in your trade plan. But can you see something in all fractals and time frames? This high volume is the same as that. Same. If this is too high and I reject it, then I'm going, remember where we had our targets. Overnight VPOC, yesterday's low, fall out, then 07, and if we keep going, 95, whatever, not a recommendation. Now, what I'm showing you is something called trading in fractals. So what this is here is the same as that naked VPOC up on top. Same thing, except I'm down in shorter time frame as you think of them. So I can keep going down into microstructure and read it. What is my indicator going to do for me? Oh, I don't know. I don't use any. But what does it do for you? Does it tell you that this is resistance? Does it tell you that if you understand market structure, that this is either a trade management opportunity here, and that this is a short or a trade management opportunity? So what I'm doing, subject to my plan, is I'm just trading different structures in different time frames, but I can read it. Now, the fact that this does this, is that a long? Is that get out? What is that? How about it's nothing more than a counter rotation that sets up an opportunity to add or just trade there to there, or trade there under here, lower, back here. Resistance is there. Resistance is here, which suggests lower. You see it? Is everybody tracking? Can you guys see this? How we doing? How about a thumb up and a like if you're in YouTube? Throw me a kiss, something. Is this making sense? I need to know this is making sense, because if you can make sense out of this and just think, you guys all know how to trade. You just haven't figured out that this is shopping. If a price is too high in the store, some are going to pay it, right? But most shoppers are going to leave the store. This is the shoppers leaving the store. Then some of these shoppers are going to go, yeah, but this is convenient. And we got some buyers here, but the sellers said, oh, really? Have some more. And down we went. We ran out of our buyers. Now our support is here. Our resistance is there. If I break below support, doesn't that become resistance? And now I come down here. Now, if I find my buyers here, right? You can see the volume right there. I didn't even know my connection was lost. Huh. So this is support. I'm going to put a microstructure in here. This is our resistance. And remember, 07 is now resistance-ish. No precision. So this is potential resistance in the microstructure. Now, the thing can just keep, it can do anything. Remember, in the casinos, the cards coming out of the deck are random, and the way the gamblers play the cards is random, and all of this is random. So we don't know. Here's what we know. This is too high. I had my sellers. This is resistance. And we also know there's going to be stops here, here, and above these microstructures. So now let's just watch. Our resistance is up in here or a little higher. Let's just see what it does. Interesting, isn't it? Now you know why I do what I do. Because when I was first learning this in the mid-'80s, it wasn't like this. It was market profile, which is time-based. TPOs, 30-minute brackets, they call them. It wasn't this. But it resonated with me. Remember the 6007, right? That was our target from there. That's a nice trade. What do you guys think? And there were sequential targets along the way. This is Trader Lab. Now, that doesn't mean you'll ever be able to do this, but I think anybody can learn to trade. Whether they do it or not is a whole nother issue. Remember, there's that high. Okay, let's get back to the market. So this trade would be over. I'm okay with that. Are you? Now, this is our area out here. Now, this can come out here. I'm going up in another fractal or time frame. Not to make you nutty, which I know I do. This is the outside. Here, let me show it to you. Let me get this over here. So we have resistance over here. Now, this is the distribution. And the outside edge is up here, called the low volume node. Now, I'm going up in time frame. So I trade in multiple time frames, like a lot of you guys tried to do. And I do it a bit differently. Because in the microstructure, this is a consolidation. This right here, this little thing. And you can see the outside edges here. So it's this. If I come above here, then I can squeeze these shorts out. And then I'm going to look and see where do I come. So the outside edge of this higher time frame distribution is out in here. So if I come out here, and I might not get over here. See, I don't know anything. Let's look at this. This is the high volume in this. This is like that naked volume point of control up at the high of the day. If this is too high, I'm going to come back here. If I get through here, then I'm coming out here. That's what I know. That's as far as I know. So I know that this, which had a lot of volume in it, was too high. So I know this is a potential short down to here, or if I push through this, out here and a short back to here. That's Trader Lab and that's trade plan. Now, nobody predicts anything. So look what we had here. Now, the thing about this is you would know these locations. So you're not making it up. You have to wait. What happens here? Well, let's look what happened here. Buyers, 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 going to the moon, Alice. Selling iceberg, selling iceberg, selling iceberg. What's over here? Nothing. What's over here? Volume. Seller. This sets up a trigger potential. I come back and test. Now, this white line is on here from before. So it was too high. It was the volume. Remember, volume profile. I get my buyer here, and what happens here? Seller, 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 seller. The buyers take a shot here. This is like the, come on, and not so much. Seller. Short here, stop there, and you're trying to come out here or even here. And we'll see what it does. And these are not trade recommendations. So let's watch. Back to that 6007 again, remember? So if it comes through here, you're looking for this. That's it. That's as deep as this gets. And you got to accept randomness, right? So let's watch it and see what it does. And these are not trade recommendations. Now, based on your personal trade plan, you might take a short here, going for this. This is the range, though. 3 points. Do you want to trade for 3? I don't. But you could if you develop the skills. I'm more of a broad stroke, So I'm willing, let's just say, if I have a target below, which we may never get to, down there, 95, if I get short setups that are structured and have a statistical edge, and there's 2 locations, this and out here, as long as and I don't want to get into yesterday's range, that sets up another problem. But this is a short in the Trader Lab, and I'm going for 95. What does that do for me if I get short there or here on the test? Let me show it to you. This is a microstructure. Let me just put a little box, and you can see where it is to the right. Whoop. Let me try to get this. This is a consolidation. Low volume node, outside edge, right? So break. This is your trigger in the Trader Lab. You pull back here. Your short can be here. You could put a limit here or put a limit there. Up to you. Stop goes over here. Target is here. Depending how you do this, you'd be risk neutral. You got to be conscious if it's qualified range-wise for the risk. If you're selling it here, you got a problem. So you got to have all this worked out in your brain and have the discipline to operate. Now, for this, a 3-point range, this might not fit your trade plan because of your execution skills. Somebody else might wait because they're disciplined and be okay if the trade runs away without them. Are you okay with that? If you're not, meet FOMO. This is your short. Your stop is here. Your scale is here. And then you're holding for 95, or actually for test of the low and then out the bottom. Can everybody see this structured trade? This is Trader Lab. Questions? How are we doing in YouTube? If you're in YouTube, you need to come to Trader Lab. If you're not getting the results you want, guys, Einstein, definition of insanity is doing the same thing and thinking it's going to turn out differently. By the way, I've been insane for many years in that sense because I did the same thing. And part of it was believing because of random profitability. The thing about it is you can have runs where you have, a bunch of winners in a row and you think it's nirvana, or see the behavior, how it holds this, and this is resistance now. And now we have some pretty aggressive buying in here. So we'll see. Okay. Now, if it takes this out, where's my next trade? It's out here. So in Trader Lab, you already know where your trades are, not mine, yours. And that's what's in the 60 PDFs in that library of webinars I've done that you can all access at no cost. And then what you do is you take it one piece at a time and you start formulating a plan. And then you need to do the work to find out where your edge is. And then you only interact in the market with the other participants when your edge shows up, not impulsing in because you see a wiggle. This has an edge for me to there. You see? Does that make sense? Now, if I come above here, I'm going to be squeezing. Well, that tells me then to be looking out. It doesn't have to be right here. It can be even up here. To be looking for the next outside edge. So the stops are above these swings. So I can come out here. That's why this is marked. Here's our resistance. Let's see. Interesting, isn't it? So what I was starting to say is definition of insanity. I did a webinar called Trader Groundhog Day, when you keep waking up, because I thought it was just the same thing as you. All I got to do is tweak it, tune it, make it better. And I even built trading systems because when I was managing monies, I was a trend follower. There was no day trading early on. And I was a swing trader, trend follower. So mostly trending markets, currencies, currency spreads, grains, metals, whatever, dollar. DX. So, and those things tend to trend, bonds. And then I was a swing trader in the big S&Ps, which is some serious dough. So that was 2 to 3 day swings. That was short term. So, and I built systems and, would optimize the systems. So I was and that was the ultimate curve fit, but it kept breaking down. And I never figured it out because I was saying, well, because this was the the proven methodology at the time in the state of the art. So I would do optimizations, but you have to grab a chunk of data from the past to optimize on and then do something called a walk forward test. So you're always way behind where the current market is. So you're trying to use the past. And when you're tweaking your indicators, you're really doing the same thing. I just did it much better. I actually used a computer. But when I first started trading, we didn't have computers. We didn't have an internet. So remember where our outside edge is. So this is very important what happens here. If I get a batch of buying here, we're going to continue, and then I'm going to be looking in this area. And it can come out here also. Let me look a little further. So I've got 2 low volume nodes here, and I'll show you what this means. Interesting, isn't it? Micro high volume. Where do we come? Right here. See it? Now, if I squeeze outside, I can come here and here. If I test yesterday's range, I'm still looking for a short, unless we just roll right through it. So for me, it's shorts only, here, here, and there. And all these are on the chart, right? Now, if you're asking me, can I predict what's going to happen? Unfortunately, no. Neither can the casinos. But what I can do is I understand why. I can see it. So what do? If I understand how the market works, then it's about getting an alignment. Then it's about interpreting the market. That's what you can learn in Trader Lab. What happened here? My indicator didn't cross over. The order flow showed me the behavior of the participants, and the volume showed me the pricing structure. And it said too high. And you could see this, just think of going to the store. Price is too high, what do? They don't pay it. They leave the store. What might they do? Come back and check it. This is the outside edge of a distribution. There it is right there, you see. So they check it. And we can come back here. That's okay too. You could be selling this, going for this. If it comes out here, you could be selling this. And your stop needs to be a couple ticks away. By the way, here I always like to talk about this. This is interesting. Most retail traders are going to put their stop right there, the high of this swing, and everybody else on the planet. What else do we know? So retail traders put their stops here. But here's another piece. If we come up here, is it possible that the sellers up here, these icebergs, and whoever else, and there's buy stops here, if I come into these stops and I don't go anywhere, what is it telling me? The sellers that were here said, oh, really? I can sell you some more? Here, have a boatload right there. Same sellers. And then where's my buyers? They're here. Sellers, buyers. Now, what's going to happen? Good question. And here's the beautiful part of all this. I have no idea. So I don't need to know because I can't know. The casinos can't know. How am I supposed to know? Here's what I know. Sellers are here. Buyers are here. Whichever way I come out, that's the way the cookie crumbles. Which way am I leaning? South of the border. Why? I have a level that's auction-based hanging out over here. This is my target, not a trade recommendation. So for me, if I get taken out of my short, life in the fast lane. I'm good with it. Am I going to get long? No, not me. You can if you have an edge. Me, not so much. And that's not a recommendation. I take stops all day long. It's okay with me. Why? If I'm taking this short, where am I going for this? 95 from here. 10, 15 point probability, possibility, and what's my risk? Minuscule. My job is to get risk neutral, cover my stop. That means a minimum 2-lot configuration. If you're in TraderLab, you don't have to do anything you don't want to do. I'm just saying is when you get risk neutral, it gives you an opportunity to manage the lunatic. I call that Hyde, Jekyll and Hyde. Hyde is your primal wiring, reptilian brain. You have no control over these impulses or chemicals that are released in your brain to make you do things that are not in your best interest. That's the fight and flight thing. This part of your brain is only interested in protecting you, from the saber-toothed tiger. And really, the saber-toothed tiger, it can't differentiate uncertainty. In other words, the saber-toothed tiger, uncertainty. Is the saber-toothed tiger behind the rock or the tree? Well, let's go the other way. Is the saber-toothed tiger sitting right here, right now? I'm in uncertainty. I better leave. Or I don't get risk neutral. My stop is here. Oh, I see a counter rotation. It's going to stop me out. I'm going to bail out. Fight and flight. Now, you may get stopped out anyway, but what do we know? If we get scaled, we now have our stop sitting here or even further away, and the worst that happens is we scratch the trade. Does that give you control, better control over your fear? If you come to TraderLab, you'll find out how that concept and building a trade plan, because we understand the problems. We all have the same problems, but most of us don't fix the problems or even know how. It is not willpower. It is an understanding of market mechanics, how the market works, a vetted structured trade plan, and learning about yourself. Because everything we think is not us, it's everything else. It's not. It's us. I believe anyone who comes to TraderLab that I can teach them how to trade. It's just a personal belief. It may not apply to you. And I always have to say past performance, not indicative of future results. But you come to TraderLab, you ask them. Ask the participants in TraderLab. And there's all different participants, all different range of process, and whatever they do, right? That's the beauty of the TraderLab. Everybody is welcome. But when you have a 2-lot configuration, those who only traded 1 lots now trade 2. Now, how do you do that? Well, if you're trading minis, you might want to go down to micros. You're used to trading a 1-lot mini, you go to 10 micros, 5 and 5. You're still trading a 1-lot, but now you can get your risk off. On days like today, trading micros, you could have a 5-figure day, no problem, if you have a plan, and of course the range and the rotations have to be there. Yesterday was a day where we didn't have huge range, so the opportunity was a little less, subject to your plan. Today, loads of opportunity. And if you're in the TraderLab, remember where we had a short was somewhere up here, I below. This was remember that? We had our short. We're still taking shorts. If you're in TraderLab, this is what you're doing. If you're interested, please, number one, if you're in YouTube, give a thumb up, a like. Encourages me to keep doing this stream. When I'm streaming, I am not taking these trades. And you can probably understand that is a bit of a conflict for me. So I need to know that traders get something out of this and that it's worthwhile for me to continue. The other thing is, if you want to take advantage of TraderLab and the education, not only TraderLab, what I do, but there's a lot of other education that's available in the Bookmap Discord server, stocks, options, order flow, of course, with a high tier tool like Bookmap. Really this is where the rubber meets the road. I find I can't trade, and I don't want to trade without it because I'm now here. There's no indicator. I am the indicator. Why? An indicator translates price-based behavior of some derivative, right? I'm doing the same thing, except I'm doing it in real time, and I speak market. This is a language. So it's like learning a foreign language, So that's what this is. This is the language of the market. And most of us are not reading the language. We're using interpreters, Google Translate. we're also doing multiple time frames. So you're speaking out of 5 different elements are speaking to you at the same time, and it's all inconsistent. You can't measure it because it's not anchored. My primer webinar talks about, and a lot of this came out of system design for me, when I built trading systems, conditional statements. If this, then that. If not, then what? Well, if this is too high, if this, then that. And then if I come back and test it, then what? Short. See? So to me, this is very simple. Random, but simple. So if I'm getting short here or there, that's all good. There was my support, remember? So I can be short from here to here, short from there to there, back to here, short to there, here, short to there, and it just makes sense. Cash flow, that's funny. The godfather of trading. No, I don't think so, but I'm telling you, maybe the grandpa. Oh, I see it. Someone just posted a trade plan sheet. Guys, if you're not in Trader Lab, I think you're maybe missing out. Here, let's take a look at what's in here. First, that's nice. This guy trades from his iPad and he logs into his screens remotely. He even trades when he's in the car. I don't know how he does that. Me, I can't trade in the car. Look at all this that's going on in here. A lot of this. Here, we opened in balance. This is all before. Two-sided trade, naked VPOC, maybe too high. And this is at 851, right? So let's get going here. Let's do a little more. Let's see. And of course, I post in here and, do my thing. I don't call trades because the job of you guys is to have a trade plan. All right, let me get back here. Sorry, guys, but see what's going on here? And there's no cost for this. This is a community. Interesting chart there, repeat. Whoop. Here, I'm trying to find this trade plan sheet, pre-market prep, and you put your levels in there. You had 60.03 quarter. Must be clairvoyant. You have to tell me how you do that one. Everything we leverage, guys. Here it is, a copy of the pre-market prep sheet. We share, we leverage. This is a community. How many places have you ever been where somebody says something, does something, you ask them a question, they oh, no, we're not going to tell you. No, it's not that way. Rod, this over your past 246 trades, you took 71 scratches. Your average loss is what? Ticks, meaning those 71 scratches saved you 3,195 ticks. Are we discussing getting risk neutral there, Rod? Is that what that is? Yes? Okay. So that's really interesting. By using the scaling approach I was just discussing, this trader, and you're welcome to visit Trader Lab. You can ask anybody anything. He saved 3,195 ticks by using a minimum 2-lot configuration. And Rod does trade more than 2s, but that's besides the point. So are you doing that? Are you guys all in, all out? Look, all in, all out is very difficult, because then when you have this, you lose your mind, because that emotional stimulus is going to disrupt your intentionality. If you're risk neutral, which is what this is about, then your stop can be out here, and if it fails the short, then you scratch. Are you guys tracking? So guys, if you're interested, Trader Lab, I think I don't know of a better community, and of course, maybe I'm a little biased, but it isn't me. I'm a guide. I'm here. I'm a guide. That's what I do. Here's all my trades. There's a PDF on that, a glossary of terminology, and there's a library of webinars. If you're going to come to Trader Lab, look at this. And most of our traders here trade ES and NQ. I know there's other traders in here that are, with crypto and metals, and this process that I share, the reason I do ES is because of the depth of the market. So for better fills and less skidding, and it's good for developing traders. There's good volume in those micros and all this kind of stuff. So it's really built around, but this process I'm sharing is generic. I've traded across many different asset classes doing exactly what you see here over the years, and all multiple different time frames and everything. It's a swing trader. This is the same thing. If you're trading options, it's the same thing. If you're going to trade stocks, it's the same thing. ETFs, same thing. Why? This is the truth of the market. This is the basis of how the market works. Most retail traders spend their lives trying to find indicators to translate how the market works. But they're not in alignment with the market. There's a thing called context, which is the big missing piece. Now, if you understood how the market works, in my opinion, you could take an indicator and actually maybe get something out of it other than conflict. But you would also, and this is very hard. I know for me, when I started transitioning away from my systems, you spend years doing work on something. What's that saying? I must have got something out of it. Yeah, what I got out of it is a lot of lost time and dollars with inconsistent successes. You can have a process that is absolutely a losing process and you still get winning trades. Gamblers have winning hands. That doesn't mean they're not gonna go broke, you see. Same thing in our business. Remember where our next target is, right? This is all on the price map. And where was that price map? 95, right there. 07, right there. So what was this? Yesterday's low. That was a long to come back here. I'm sorry, this is today. This is yesterday's low. This is yesterday's retail price. Too high. That was our short. This is where the stops were from yesterday's longs. Right here. Get under there. 60.07. This is the auction. Get under 60.07. 94, 95, whatever. But can you see it? This is the auction. Are you trading the auction? And here's the 95. There's the 07. There's yesterday's low. Can you see it? Do you like it? If you do, come to Trader Lab. And if you're happy with what you're doing, come to Trader Lab. Share with us. Because that's what the Trader Lab is. There's no right or wrong in trading. But I'll tell you what there is. It's very simple. Statistical edge. Gaming process. You don't have an edge, go to the casino, get the cocktails and the ticket to the buffet. Enjoy yourself because you're gambling. If you want to be in the business of trading, you might want to, do something a little different, right? Find out what other traders are doing. Visit the Trader Lab. And remember, there's 60 PDFs. These trades I'm sharing with you, and I'm not a vendor. When I first started doing this, it was because traders were asking me, what are you doing? And then Bookmap asked me, if would you help out? Yes. Yeah. So I put these together, and these are structured trades. And these are live. Some are just screenshots, because I was posting stuff and trying to educate. And then Bookmap asked me now you could see this. This is that VPOC migration, selling icebergs. Same thing you seen me do in the stream. Same. It's right here. auction market theory, different ideas, absorption, sweeps. And I also work with Bookmap developers on ideas and things to try to help retail traders. And I don't use these, but this was experimental. So this is the idea, and you're welcome to all of these. Live trades, real trades, other stuff. And you're all welcome to that. This is our target. There's nothing more complicated to it than this. Can you do this? Can you learn to read the market? If you think you can, or you want to find out if you can, why this was a short, why this is a short, why that was a short, why that was a scale, why this was a short, why that was a scale, why this was a short, why this was a scale, this is a scale, and this is a target. If you don't know the why, come to Trader Lab. I believe you can. And then again, you got to do the work. This is a roll your sleeves up situation, dig in, and decide for yourself, do you want to become a professional trader? Do you want to create a career in this business? This is the Trader Lab, and you're all welcome. Next target. Please give a thumb up in YouTube, a like. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. I'm just checking for questions. We have a gap down here. Who knows? Not my job. Now, there's other possibilities here. We want to watch for a retracement back here in this area. Okay, you got to watch this right here. So it's around 95, 97, and I'm running out of time. I'm going to have to go, as they say. Watch this area here for retracement, and then think about it. Thumb up in YouTube. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. This is an area to observe. Low volume is there. Micro high volume structure is here. This is your resistance. This is your outside edge. 94, 95, I think. Micro high volume, break. Volume is here, break. Outside edge is there, right there. High volume, break. High volume, break. This was big. Please give a thumb up in YouTube. I am out of time. If you're interested in Trader Lab, use that link in the bottom of YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. Reverse engineer, review, screenshot, work on your craft. This is what you need to do if you want to become a professional in this business. Outside edge is up here. Resistance is in here. You can see where we're coming. It's right here. What happened right here, guys? Right there. Micro high volume, micro high volume, high volume, high volume, micro structure. Please give that thumb up, guys. Use the link in the bottom of YouTube. There is no cost to access the Bookmap Discord Trader Lab community and all the additional education. Thanks so much for visiting the Trader Lab today. Look forward to meeting you in the lab. And everyone, don't forget, subscribe to the channel if you want to get notifications when there's interesting things going on. And Also, don't forget to hit the like. Thanks, guys. Appreciate you visiting the Trader Lab today. Look forward to seeing you there.